the thing that I have noticed is the person that's willing to go out and serve families for their needs, not the person individual needs, but for the family that they're serving for their needs, they're the ones that end up earning more money. What they do with the money. So money doesn't change people. Whenever you hear this concept of money changes people, paper can't change. The paper has no value, right? It can't change a person. Make sense? And if you would understand this one simple concept about money and the origins of money and how money works, I'm telling you, man, that life is going to be much, much easier for you. You'll be ahead of 90% of the population if you just understand this one simple concept. How are you, champions? Good evening, good evening, good evening. Welcome to another Money Monday. Put it in the chat if you're in the house. Let's see who we have in the house today. Put it in the chat. Let's see who we have here. I see Steve in the house. I see Lloyd in the house. Sandrine is in the house. Florence is in the house. Tamoy is in the house. Alice is in the house. If you're in the house, fire up the chat box. Let it be known. Blaze is here. What up, Blaze? What's up, Zachary? What's up, Divine? Divine's in the house. All the champions are here. Hey, if you're in the house, Bernadette is here. Good to see you, Bernadette. Good to see you. I love those fires. Keep the fire coming. Keep the fire coming. Welcome, everybody. Welcome, Priska is in the house. Good to see you, champion. Awesome, awesome. Hey, it's a jam-packed house today. Good evening, Zachary. We have a packed house today, and I am fired up to be here. I am really excited to be here. You know, more and more and more. I just can't wait to be on this Money Monday because I just know what we can do and the value that we can bring to people. So if you're excited, show your excitement in the chat box. Bring the fire, bring the heat. If this is your first time here, we welcome you, by the way. We welcome you, and you're welcome to be here every single Monday. We're here Mondays at 8:00 p.m., and the topic is money. How to make more of it, how to save more of it, how to keep more of it in your pocket, and that's what we want to do, add value to you. I remember hearing things like CPI, overnight lending rate, bank rate, and I'm like, what the heck do all those things mean? And it's designed to keep you confused, by the way. The less you know about what's happening, the less you're going to complain, right? So there's all this big language, big jargon, and today I'm going to simplify a lot of that so that it makes sense for you. If you want to get to a different place, it requires a different mindset. Albert Einstein, very, very powerful statement, he said. The same mind that created the problem cannot fix it. It requires a different level of thinking to fix the problem. Jacket, here's the 3 accounts that you need. You need an emergency fund, all right? And this emergency fund is your money that you put aside so that you can save if something happens. Let's say you have a car and you're driving and boom, you ran over some nails and you lost a tire, right? Okay, that's $400 for that tire. You got to go get a new tire. You shouldn't have to use your credit card and go swipe your credit card. Let's talk about what's happening in the economy, because what's happening in the economy is no laughing matter, right? There's no joke. It's a serious situation. So I want to talk about the things that you might be seeing in the economy, what's happening, what's going on. Maybe there's some key phrases, key terminologies that are being thrown out, and you're like, what does that mean? I remember hearing things like CPI, overnight lending rate, bank rate, and I'm like, what the heck do all those things mean? And it's designed to keep you confused, by the way. The less you know about what's happening, the less you're going to complain, right? So there's all this big language, big jargon, And today I'm going to simplify a lot of that so that it makes sense for you. On Wednesday, you may have noticed that the Bank of Canada increased their policy rate by 50 basis points while they're continuing quantitative tightening. And if you recall, quantitative tightening, so let me give you quantitative easing, right? There's quantitative easing and quantitative tightening. Quantitative easing is when the Bank of Canada prints money. So they did that during the pandemic with the CERB, for example. They were printing money. They were handing money out, a lot of money. They were just giving money out, right, to spruce up the economy, get the economy going. If the economy is taking off too much, it means it's getting too hot. What the Bank of Canada tries to do is to cool it down by bringing some of that money back in. So quantitative tightening is them bringing the money back, right? So they use a nice fancy term, but really they're saying, I want the money back, right? Give me the money back. I printed, now I need it back, right? So there's a difference between quantitative easing and quantitative tightening. So the Bank of Canada increased the target overnight rate to 4.25%. So you say, well, Jermaine, you know, what does all this mean? Well, before I get there, I want to ask you a question. Do you know how many times the Bank of Canada increased their rates this year? The Bank of Canada is the federal bank. Okay, so this bank is on top of all the other banks. 7 times. How many? 7 times they've increased their rate. By the way, how many times this year have you gotten a raise at work? Because this affects everything. Right? It affects your spending, the power, your purchasing power of money, how far your dollar can go. Every time they increase the rates, your dollar goes less and less. It's able to reach less and less further, right? So 7 times. What is the bank rate? What is the overnight lending rate? I'm just going to be very, very simple. I'm going to give you in very simplistic language. The bank rate is the rate that the central bank, so the head bank, the Bank of Canada, this is what they charge to the other banks to borrow funds. All right. And then the overnight rate, this refers to the rate that the banks charge each other. Did you know that banks borrow money from each other? Were you aware that if, let's say, Bank A is running into difficulty to cover their reserves, let's say they have some deficiencies in their reserves and they need to top that up, their first bet is to go to another bank, right, before they go to Bank of Canada. So there's 2 rates that is out there in the economy, the bank rate and the overnight lending rate. So the bank rate, again, refers to the rate that the Central Bank of Canada, what they charge to lend out their funds. And the overnight lending rate, you'll hear this term thrown around a lot, is the rate that the banks charge each other to borrow funds amongst themselves. All right, so that's all that is. And they're usually a little bit different, okay? Now, what is the impact of all of this? There's people right now, there's people literally on this call as we speak that purchased a house in 2020. And their mortgage payment in 2020, this was when the housing prices just took off, right? But here was the deal. The interest rates were really low. You could get really low interest rates on your mortgage. So people bought houses like crazy because they were fearing that they wouldn't be able to buy a house if they don't buy it now. So everyone was buying. And you know, many people bought, and this particular person that I'm talking about, they purchased in 2020, and they were paying about $3,000 a month for their mortgage. And now with all of these hikes, in fact, the previous hike, not this last one, but the previous hike, their mortgage went not from only $3,000 a month, but now it's up to $5,000 a month. That's a $2,000 per month increase since the house was purchased in 2020. And now this family, what they had to do was, unfortunately, they had to move into the basement. and they had to rent out all of the rooms that they have up top, right, in order to cover that $2,000 a month gap. So I want you to understand things are getting out of control. Things are getting crazy. There's a whirlwind out there. A lot of people are using credit to bridge the gap. And this is what you're going to see more and more and more of. Now, you will hear this terminology out there, CPI, or Consumer Price Index. What is the Consumer Price Index? So let me give it to you like this. Let's say it's the beginning of the month, all right? You got your check from where you work, and let's say your rent is due or your mortgage is due, so you pay it. You jump in your car, you drive to go to the grocery store, you pick up some fruits, you pick up some vegetables, you pick up some milk, you pick up some bread, you stop off at the mall, you buy some shoes, you buy some clothes, and then at the way home, you fill up your car with gas. Now imagine you put all of these things in a basket, right? In a shopping cart, if you could. You put the food, the clothes, the rent, the mortgage, everything in a shopping cart. Now, imagine all of these things in that shopping cart, and you were able to come up with a value. That value is the Consumer Price Index. And this is what the government uses to measure the overall change, right, in the economy of the consumer price based on this basket of goods over a period of time, right? So you can see here on my slide, it measures food, it measures household operations, it measures transportation, it measures recreation and education, it measures shelter, clothing and footwear, it measures health and personal use, even alcohol and tobacco. So all of these things goes in a basket, if you will, and that is called the Consumer Price Index. So in 2002, that number was 144.8. All right, remember that. Write that number down somewhere. In 2002, it was 144.8. All right, here's a quick video, a quick explainer video. It's from Statistics Canada, and they're going to more elaborate on what the Consumer Price Index is.
The Consumer Price Index, commonly referred to as the CPI, is a measure of the rate of average price change for goods and services bought by consumers in Canada. The CPI is the most widely used indicator of inflation. Imagine a shopping basket. Fill the basket with things that you and other people in Canada might buy. Now track the cost of this exact basket over time. The change in the cost of the basket is a basic illustration of pure price change, which is what the CPI measures. The CPI basket includes all goods and services purchased by households in Canada, the groceries you buy, the electricity and water rates you pay, the haircuts you get, the hotels you stay in, and much more. Each item in the basket receives a relative importance or basket weight that represents the proportion households spend on each item. For example, a much larger share of Canadian spending goes to gasoline than to milk. Therefore, gasoline will receive a larger weight than milk in the CPI basket. The basket represents the purchasing patterns of Canadian consumers, which change over time. Years ago, for example, the CPI included the price of a record player or 8-track. Today, the basket includes items such as smartphones and computers. Frequently updating the basket ensures that the CPI remains representative of consumer spending. With a practically infinite selection of goods and services, measuring the price of the basket requires a large-scale, coordinated effort by Statistics Canada. Most of the price quotes used to calculate the CPI are collected in retail outlets in numerous locations all across the country. The collection is done by Statistics Canada employees, known as interviewers. Other prices are collected at Statistics Canada headquarters using sources such as administrative data and the Internet. In order to measure pure price change, interviewers visit retail outlets and collect prices each month for identical products. Changes in the quantity or quality of collected products are taken into account. For example, if the size of a juice box becomes smaller, but the price does not change, consumers are implicitly paying more for the item. Adjustments are made so that these changes are reflected in the CPI. To ensure that the CPI is a high-quality indicator of consumer price change, Statistics Canada follows internationally accepted methods that compare favorably with those of other statistical agencies around the world. The Canadian CPI is used for a variety of purposes, including adjusting wages or payments in order to maintain purchasing power in an environment of changing consumer prices. For example, pension payments and tax brackets are adjusted based on changes in the CPI. The CPI is also used by governments and businesses as a tool to evaluate the performance of the economy and to help guide the formation of fiscal and monetary policies. Thank you for watching. Visit Statistics Canada's website if you would like more information on the CPI.
All right. So the CPI, okay, Consumer Price Index, you're going to see on this video here. Remember I told you it was started in 2002 at 144. Here's a video showing it increasing over time. So what is this? This is the inflation, right? This is the inflation till it ended in October 2022 at 153.8, right? So this is what the government uses to track the inflation. When you hear them say inflation is increased, they're looking at the Consumer Price Index. They're measuring the goods in the basket and they want to see what's happening. Now, why is this important? Why is this important? Because when this goes up too much, the government, what do they do? Or the Bank of Canada, I should say, what do they do? The Bank of Canada raises the interest rates to bring it back down, right? The goal is not to make this go out of control and go too crazy. So what is the solution? What is the solution to all of these things that are happening in the economy? How can you better protect yourself? You know, if you were going in the Cayman Islands, many times we go out in the boat and we love to fish in the islands, right? So you go out into the boat. One of the things we always go out with is a life jacket, a vest, right? No matter what happens, the boat turns over, you're able to swim, you're able to float. If you're knocked unconscious, it's very important. What is the life jacket? Well, you got to take control. You got to take control. So here are some things that you can do, that you personally can do to take control. Number one, you got to pay yourself first. We talk about this a lot, but many people don't practice this. Many people, they pay their cell phone bills first. They pay their, they pay their rent first. They buy their clothes. They buy all those things. Jermaine, I got to have shelter, right? I got to make sure that I pay those things. If you want to take control, here's what you're going to do. You're going to pay yourself first, and whatever is left over, you save it. 90% of the population, they spend, and whatever is left over, then they save it. That's the wrong approach. The wrong approach. All right. My opinion, you pay yourself first. You take a percentage of what you make. You pay that. You take that away first before anything else, before the Rogers, before the TELUS, before the Bell, before Netflix, before everything else. You take that percent, and I recommend minimum 10%. You put that aside, and then you live off of 90% rather than spending, and whatever is left, you go and you save it. Number two, adjust your priorities. Figure out what is your priorities. What's your long-term priorities? If I were to ask you, give me a list of your short-term, your mid-term, your long-term priorities, can you break it down? Would you have that ready? Number three, change your thinking. Can I be honest with you? Can I be completely honest with you? Is that okay if I'm honest? Give me a thumbs up in the chat if I'm completely honest with you. If you allow me to be completely honest with you. Okay? Give me, all right. Thank you, Steve. You got to change your thinking. The level of thinking has brought you to where you're at right now. Let me repeat that again. The level of thinking has brought you to this exact moment that you're at right now. If you want to get to a different place, it requires a different mindset. Albert Einstein, very, very powerful statement, he said, the same mind that created the problem cannot fix it. It requires a different level of thinking to fix the problem, a different mindset to fix the problem. So many people got themselves, for example, in a problem where they're in debt. That same mindset cannot get them out of debt. That's why they're trying and trying and trying. I was one of them. Trying and trying and trying and struggling, but cannot get out of the debt. A different mindset needs to get out of debt. The person is broke. They don't have any money left over at the end of the month. Every month, no money left over. Every month, more month is left over at the end of the money than money is left over at the end of the month. How do they get out of that situation? They need to change the level of thinking. Number 4, got to adjust your lifestyle. Adjust your lifestyle, especially in today's economy. You know, my wife showed me an article where Jeff Bezos was mentioning now is not the time to buy the big purchases. Now is not the time to buy the big house or anything big. You want to adjust your lifestyle. Right now is the time to position yourself in the next couple of, I would say in the next 2 years. There's going to be so much opportunity. But the problem is most people won't have the money to take advantage of the opportunity or the resources to take advantage of the opportunity. Why? Because right now they didn't adjust their lifestyle. All right. Number 5, this is something that we are adamant about, helping people to adjust their income. You know, we were talking to someone earlier today. This lady was working 3 jobs and still not able to make enough money, and she's looking how can she adjust her income so she can make more money, and her thought process was to go get a 4th job, right? Go get a 4th job. Can you imagine 4 jobs? Okay, so people are looking for additional income, you know, and we advocate to have additional multiple streams of income in a business format, right? In a side hustle rather than multiple jobs. Number 6, you got to avoid the credit trap. They're going to mail you credit cards in the mail. They're going to give you lots of offers to increase the credit. But I want to challenge you to avoid that credit trap. This, let me tell you, it's very, very easy to get into debt. Very easy. Okay. It takes nothing to get a $10,000 credit card and just go swipe, swipe, swipe. You know, this Christmas season between now and, you know, Boxing Day, you can max that out, no problem. But here's the deal. How long will it take you to pay that $10,000 off? How much interest will it take for you to pay off that $10,000? Most people don't do these calculations before they spend the 10 grand. They just spend, right? They just spend it. And number 7, set goals and have a plan. Too many people, they have their goals, they have their plan in their head. And it's not a goal, it's not a plan till you have it on paper, right? You got to take it out of your head and put it on paper. Brian Tracy, a great author, he says, geniuses think on paper. Geniuses think on paper. Get it out of your head and put it on paper, right? Have a goal, have a plan. Now, there's 3 accounts that you ought to have when it comes to building any type of security, right? You want to have that safety jacket. Here's the 3 accounts that you need. You need an emergency fund, all right? And this emergency fund is your money that you put aside so that you can save if something happens. Let's say you have a car and, you know, you're driving and boom, you ran over some nails and you lost a tire, right? Okay, that's $400 for that tire. You got to go get a new tire. You shouldn't have to use your credit card and go swipe your credit card for that tire. You should have a fund, your own fund that you use and you pay yourself back when you are finished, right? So that's the emergency fund. The second one you want to have is a short-term savings. And short-term savings is different from emergency fund. This might be if you have a trip that you want to take, or some leisure activity that you want to do, or something that's fun or good, you use this short-term savings. You save up for your short-term goals, right? A trip that you want to take your family away somewhere. Again, you don't use your emergency fund for the leisure trip. You don't use your credit card for the leisure trip. The smart thing to do is to have a short-term savings fund for that. And then the third one is the long-term savings and investment, some sort of long-term savings for retirement, right? After age 65. You build these three things, you're going to be solid as a rock. And here's what you ought to do. You ought to have them in three separate accounts. This should be three separate things. Why? Because many people try to put everything all in one. But what happens? They spend and they're not sure where they're taking from. Are they taking from their long-term savings? And then they get to age 65 and they wonder why they can't retire? Are they taking from their emergency fund? Three separate accounts is the best way to run this strategy. All right. So you want to have your emergency fund, your short-term savings, and your long-term savings. This is going to make sure you have that powerful, powerful life jacket that, yeah, doesn't matter what happens out there in that weather. The boat can turn over. All right. Doesn't matter what happens. You will stay afloat. Okay. Why should you save for the future? All right. Well, you want to feel more secure, don't you? Don't you want to feel more secure? How do you feel with that life jacket on? Security, right? You want to be prepared for emergencies. You want to make sure your stress level goes down. The most stressful people that I see are the ones that are stressed and worried about money. When an emergency happens, their stress level goes through the roof because they're not sure how they're going to deal with that. You want to be able to spend with less guilt, with no fear. Many times people are in the line. They're going to go swipe their card or put in their PIN, and they're not sure if it's going to make it or not. You want to spend without worrying about that, not thinking about that. Okay? You want to be able to go into the restaurant. I remember once I was invited to the restaurant, and it was a friend of mine invited me. We went to a pretty nice restaurant, and I looked at the menus, and the restaurant is expensive when the menu doesn't have dollar signs. It just has numbers beside the the items, right? There's no dollar signs there. And I'm looking at it, I'm like, oh my goodness. So what do I say? I said, oh, I'm really not that hungry. I ate some stuff before I came, and I'm not feeling that well. And come to find out, so I order a salad, right? The salad alone was like $40. And at the end of the meal, he pays for it for me, right? He paid for the whole thing. But where was I coming from? A scarcity mindset. I was coming from a scarcity mindset. So I was spending with the guilt and the fear, even though it wasn't my money that I was spending. Make sense? So you got to have that mindset that you save and you have confidence with your money. You can afford major purchases. Something big comes, you can afford it. You have no issue. You can pay off any debts that are there. And most importantly, you can avoid new debts. And what I want to tell you, you make it to age 65, you want to retire comfortably. Many people, they say, oh, I'll worry about age 65 when I get there. Again, remember what I said about mindset, changing the thinking? At age 65, that is going to be your now. If you wait till age 65 to worry about it, it's too late. It's too late. Savings in retirement is sort of like the toilet paper roll, right? You ever get into the bathroom and there's no toilet paper roll? My wife is going to kill me for using this analogy, but you want to make sure you have it when you need it. Make sense? That's your savings.